Good night, everybody. My name is Theon Sims, one of your hosts of the Limitless Podcast, and we're welcoming our co-host, as always, Dr. Matthew Preston. Hail up the people, and Matthew,
Hey guys, what's good?
and of course, Sir Ryan Strachan back again. Loving that. Our first return guest. Thank you for being here, Ryan. Thank you for being here.
My pleasure. First time for everything.
Right. We have as you guys can see, he's you know drinking. What are you
It's
drinking today,
lemonade,
Ryan?
man. What's the guys talking
Oh,
about? It's actually my default drink in the house. You know, it's Hennessy, ginger, beer, tonic water, and lime. It's
wow.
a long
Okay,
story how I
nice.
got it. That's another story, but yeah.
So Ryan, we have a lot to discuss, I believe. I think
Mhm.
we've seen your tweets. We've seen what I guess everybody's probably wondering what I'm talking about. Some people may know about the 138 deal, right? 138 student living, right? I
Yeah,
want to just jump right into it if you don't mind.
sure. Tell me what you want to talk about with it.
Uh okay. I guess the simplest question would be maybe why an APO?
It's a good question. You're getting right into it. All right. Let me tell you.
Or you can start from why that you can just start from the beginning of why the whole deal in the first place.
All right.
Give us
So,
context.
well, firstly, great to be here, and it's a pleasure. This is the first communication I'm having with any outsider in a public fashion. 138. So this is the story.
Limitless exclusive. Guys, subscribe please, because honestly, you guys not getting this content anywhere else right now.
It's no secret that I've been acquainted with the business for a long time. There was, I can say now, a few years ago, we there was a sale of, I think, 22.5% of the business, which is public. They never disclosed the broker, but we were behind that. So I found the players to execute the transaction. So known a lot about the company for a long time, from even before it started. We won't get into how I know, but I think inquiring minds can perhaps connect the dots and see, oh, I may have an idea about it. Long story short, always liked the business, always thought it had a part to play, thought it played or it
Hmm.
represented a formalizing of a sector in Jamaica that is perhaps not as formal. I think real estate, trust, and the like have just become a thing now. But 5 years ago, or six, no, 7 years ago, I think whenever 138 would have started, it really wasn't as popular locally. That kind of
Hmm.
formalized structure in real estate. The thing about real estate is, a man have a little money or a woman have a little money. She buy one house here, buy a next one, and two is going to start rent them out or live in one, sell one, take the equity. They don't tell you about all the money you have to take to pay property tax and maintenance and dealing with tenants and landlord headache. But the point is that was the state of play. So sat down, and if you look at the composition of 138, you realize there's nobody with more than 50% ownership of it. That's the first point. And sorry, let's turn off my phone. So one of the things that the robust, and I'll insert this word, misguided in my opinion, APO versus rights issue debate ignores is the nuances of every transaction. To me, it's kind of like, I'm a big football fan. I have never played professional soccer, so it'd be like me trying to tell Leon Bailey that one of us square the ball, or one of us like try beat the man or salad the man or whatever, because the perspectives are different. It's a lot different than when you actually have to go in the room and figure out the best solution for the client. Now, and the rights issue would work if you had one strategic partner or two who would want to come in to the transaction and essentially reduce the amount of work the broker would have to do. I mean, I'd love that because we just get our fee same time. But that was just not, or does not appear to be, the reality as of right now. Furthermore, it didn't seem to be what the board, which is another thing, the board wanted or thought was suitable. And this is all public knowledge. So I'm not telling tales out of school just yet. So, really and truly, the APO was simply chosen because that's what the board wanted. And to my view, that's what the circumstances dictated. I think as well, though, being practical, I think there are a lot of persons who would have exposure to real estate who would perhaps want to do it in a more passive way or a less active way. The grandmother who has, whatever number of properties really don't have the time to be going around running down tenants for money. The pension fund that may have capital to deploy, may be concerned with falling real estate prices or falling rental yields, as the case may be, or the lack of unique opportunities to buy in. So I gather some pension funds are saying they're not buying anymore. So an APO for in this instance was just the more practical mechanism. Because again, the other thing is it may not, one is a large offer. It's not going to be $500 million. It's not like a junior market transaction, which is the first
Hmm.
thing.
And they're already listed on the main market. So
Correct. So,
yeah.
it's going to be a large offer. 'Cause we're talking about, what's it? They have two, I think, two towers up, and there's a third. They're probably not going to do a third, as far as I know. But I mean, we're talking, it's $1 billion business, so we're talking an offer that's going to be up there. So I mean, and in the landscape, you may not want to limit it to a number, to a set number of persons. I can really go off the deep end on this. So I'll say this now. So the another thing people say is, oh, the price not going to move, blah 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 blah. Well, guess what? They just paid a dividend yesterday. The first no, on the 23rd, first dividend ever. Right? I watched, as I always do, on Twitter in some cases anyway, and I said, oh, announcement comes and the price drop. I heard John Jackson say it here, some other people on Twitter say it. Now it's trading back at 570 or wherever it is a week later or 2 weeks later. I mean, what was is that much ado about nothing? So, it's always interesting because most of the commentators were not shareholders. So, they should have criticized Barita's APO or Derman's, for all intents and purposes. It's not a retail offer. So, I mean, but anyway, so both serve their purpose, both if priced properly, both if they have a valid proposition, and both if they are not, what's the word? I said mispriced a while ago, but there was something else. They provide capital to meet an objective. Objective in this case will be disclosed shortly. But as I said before, 138 is hitting its targets now. It's rebounded through COVID. I
Hmm.
think profits were up 30 odd percent. It's trading at a PE of like 5. So
Yeah.
for the investor who may find it appealing, it's a great opportunity.
Okay. Okay.
Yeah, great opportunity. I can't say more, but I thought I'd give you guys a chance to chime.
Uh, I mean, one thing I would say, I think you had mentioned it. Like there was a tweet you had said that not every offer is the same. So like there are technically ways to do offers where I guess retail investors, the typical way we make money is from cap gains. So there are technically ways that you can structure an offer that would be possibly, I guess, more accretive to or
Or
more beneficial
beneficial.
to the
Yeah.
price.
Sure.
So I think that's why some people are just like, oh, they've seen, they've seen lots of APOs, they've seen lots of APOs that typically there when we buy as a retail investor, when we buy a stock, we expect it to go up, even if it's not the 1 week pop like an IPO or whatever. At some point, 3 months, 6 months, 1 year. And I guess the thing is, when you look at some of these offers that have come out, you look at those different timelines, how it performed 3 months after, 6 months after, 1 year after. Um, a lot of them, they haven't really met the goal that the retail investor wanted when they were buying it. Some of them, it's either maybe at the same price. Some of them, it might even be down. So I think that's kind of why it's like people, I guess, in some ways have PTSD. They might be worrying that, oh, is this offer going to be just like that? That I put my money, this was supposed to help me pay for this, and now it's down.
Mm.
Um,
Right,
And
right.
you said it's like the price dropped as the APO announcement came out, and then it traded back up. But the APO hasn't happened yet. I mean, I don't know how you guys plan to structure it at all. I guess we'll see. But the new shares aren't out there yet, so that effect hasn't really happened. So
Yeah, right, right. We haven't even announced a price. So,
yeah, there's nothing really announced
yeah.
yeah, so,
other than
yes.
But I guess the thing is that the typical thing what
Right.
happens,
hmm
it's a discount to the market price. So um, so say I had bought 138 a couple of years ago when it was, I think there was a time where it was like a dollar or so. Let me look back. So
You fell
I
that
see
low.
like early 2019, it was like
Mm,
went as low as like $1.95. If I was that investor, I bought at say the $2, and now 138 is at $5 today at we're
mm,
recording. So I'm in pretty heavy profit.
mm,
If the APO say came out at um, say it was $3, um, I could just sell right now at my profit and then buy back my units into the APO. So I'm not sure if that's what some investors are thinking. Okay, the typical offers are discounts to the market price. I can just sell now and then buy back in later. But I guess we'll see when the actual price comes out.
yeah, I mean, let me tell you, I think, and I'm just being very careful because I'm talking about something that is ahead. So, as of right now, I don't think the EGM has happened yet to approve the APO. The
hmm
board has approved it, but
Mhm.
other formal steps have not materialized. Be that as it may, it was reasonable to say if the APO price is very far below the existing price, then it makes a lot of sense to sell and buy in the APO if that's to in line with the
Just
buyout
just
strategy.
logic. Just logic.
Absolutely, absolutely. The thing is, there's always and again, if it comes again down to the scale, because if it's a smaller allotment, then by all means, I mean, I don't think anybody can fault that at all. For me, I tend to look at the business itself in the context of a number of businesses. So I don't invest for myself or others to lose money. Right? No, but from where my standpoint, the only thing I have that I can hold on to if a business falls in price is the rationale for buying it, right? So people can speak about, and then the other thing is usually, especially at this stage, I'm buying in heavy volumes. If we take out a position for like my client base or persons interested, so again, that multiplies my reliance on something I can that's tangible. Otherwise, they were saying, "Oh, so you take up my $1 billion and buy this thing, and you know the reason. So I need a new account. I need a new advisor. I'm going to pull my money from Grace. 'Cause I brought it here because of you." You know what I'm saying? So it's serving several masters. Unfortunately, I think, and it would. And let's use this specific example, right? And we can get back to the other APOs should it be necessary to. 138, you have to remember, was a startup, I think, 7 or 8 years ago, whenever it would have started. It was a startup, like $0,
Mhm.
broke ground, built out. You guys would have gone to UA, so you would have known, you would have seen the progress of that. When I would have,
Yeah.
I never went to UA, but in high school, when I was in college, it never existed, right? So we're literally seeing a business go from zero to now approaching $400 million in profit annually, even after COVID,
Hmm.
right?
I mean,
So in that
I
point,
went to, I lived on Irvin Hall, and they built
mm,
up Irvin. So I remember
right,
I moved in the year they finished building it. So yeah, I saw the progress and everything.
right. So in that context, the buyer must be aware that they're buying into a startup. Now, contrast that, I'm not sure, I really said I was not going to give any trouble today, but now we're seeing some startups come up and they're barely making $100 million in revenue, much less profit, right? So it's really two different bargains. But when persons buying into startups,
Hmm.
generally speaking, they're buying with an expectation that this may take a while to get to this point. So I would say then, in response to you, Matthew, if it's about that kind of outturn, it may not be the opportunity. I'm not saying it can't happen, but I'm saying it may not be the thing that would meet your objectives necessarily. No, there is another school of thought, and I'm saying if hypothetically, let's say they're listing and the projected dividend yield is 12%, right? If the market rate is 6, the only way for their actual dividend yield to fall in line with the market is for the price to go up
Hmm.
if they have this high payout ratio. So one may say, well, right, if they're really coming out at this dividend yield that is superior to even bonds, then it makes sense because circumstances are going to push the price up to bring that yield in line with what's expected from the market. So that perhaps could be an opportunity. Should it? I mean, we would have seen cases like the JPS 9.5% perpetual preference share, which would have gone from 10 US at the time, and I think it's about, sorry, 20 US now, and it's paying dividends 9.5% at that 10 US price index to the US dollar. But again, that doesn't get spoken of in the market because it's double. It's really doubled in USD terms over the last 7 years. Whilst offering 9.5% at that acquisition price.
Mhm.
So, it's really, I think, where how I view it is really about who it matches. It's if you were to ask me, retail, I'm a 138 SL shareholder, and a few of our, some of the top 10 persons, whatever, are
You
in the
actually told us in one of your previous episodes with us. I'm not sure which part it was, but you
or
said best stock. You literally said 138 SL best stock. So
well, I guess no, you
yeah.
know why I said that.
Yeah, I
Yes,
guess
you don't know
that's
why,
true.
but I think no, I think for sure that investment will be because it will be a good one for. I mean, I'm thinking long for a long time because I am at the point, and I only speak for me. I don't really trade as much. I really just buy. No, yeah. Sometimes if I think the growth is not going to materialize at the same rate anymore, I'll get rid of it. So I sold SOS, for instance, which
Hmm.
I've forgotten about. I never remember I had it. I sold, I think, 16 or 17, wherever it was, because literally bought it, forgot about it, and I look. I remember I was listening to the news one day, and I heard somebody say, SOS climbed at whatever rate to $13, and I'm like, what are you talking about? We just bought it at 5.
Yeah.
Look back, and then I start to watch it, and the numbers start to come out, and I said, wait, so 17 is a little high. But the point is, generally speaking, I remember why I forgot it. 'Cause it wasn't that much money in the grand scheme of things. That's why I never wasn't paying attention to it.
Hmm.
And 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 So I said, no, that's all. Well, I want to it, it's a meaningful enough position and the rest of them. I'm not trying to sell because then it's a headache to go to research to find something else. And with all due respect, I'm not buying Siboney. I'm not buying, a company that's at like 50 times earnings. I'm just not doing it. So I have to rely on what I think is good. So I don't have that larger pool of things to consider. And if I have the cash, I will spend the money. So it's, we only live once, right? So
Mm-hmm.
I
You
try to
only
be
live
productive.
once. Mm.
Yeah, I try to be productive. That's really it. I mean, let's say rights issue beneficial. We are looking at two actually, but that's only because the client has said, well, we see how a rights issue could work because we have the investor. But it's a little rich. If a lot of these guys is over, like again, I come back to the football illustration. If I went to Man United's training, or better example, if I went to train with MVP them every morning for a week, I'd be like, I respect what you guys doing. I am not. This is just not my thing, right? I mean, if people went in a room and listened to a client talk about what they need, I'm going to say, boy, you should do a rights issue instead of an APO, and they'll be like, you have the investor? No, we can find it. You never get the transaction, because
Mm.
it's a situation that there's 12 other brokers out there, or 14 at first, 15, but not necessarily not only 14, and people are saying they want the business, so that landscape, you have to do what the client wants that's best, and once it's within reason, and it's either an APO or a loan, unless you're giving me a strategic investor $2 billion, then sure. But they're not giving me no.
Yeah.
They're upset. They're not giving me 2 billion either, so it don't matter to me.
Mm-hmm.
Okay.
It's all good though.
And I think
It's all
also
good.
it's also when you do the APO, a point you had mentioned was like the degree of, I guess what do you say, the amount of capital raised, and you relate that to the size of the business, but then also who is getting the shares. Because if
Mm.
you, for example, say a large part of the APO is taken up by like a reserve pool, and it's a person who isn't going to sell like an institution, then that reduces some of that selling pressure. So even if they get the shares at the big discount, they're not going to go and sell on the market because it just doesn't make sense. But then if you have
Right.
it split up between a lot of small men and stuff like that, every look 100 grand, 100 grand, 10 grand, 10 grand, that's when you start to possibly get the problems, I'd say.
I mean, all right. Let we should. I like this conversation because I think it's very important. So the shareholder composition matters a lot, no question about it, right? I don't know if we're gonna have a large reserve pool. We'll see. As I said before, I think the dividend now has put a different spin on expectations, particularly how I think we may position the offer. I think they've stated in their prospectus they intend to pay out 75% of their profits as dividends. If you use the
Hmm.
profit now and you work backwards, you look at the share price, you're looking at a dividend yield of about 14% once you start paying out the dividends and once they get back all the money from you,
Mm.
Mm.
right? They're,
They,
they're,
What
wait,
they're,
they
did the
had
they're
to
yield?
said the timeline. They had said like it would be
the
quarterly
timeline.
or well, no, as
It's
in how
maybe
often?
75% of the total. I don't know. It should maybe quarterly or it could be twice
Oh,
a year between. I think they have the big
mm,
inflow of students in when's it, August or September.
Yeah,
So you could
August.
probably
mm,
They
expect
start coming in.
payments in. You could probably expect payments in, as I say, October, November. If I was guessing, I don't know. And they paid one in
mm.
Hmm.
February or maybe in August. Maybe based on
Cause
forecast.
the most recent one that said interim, so they're definitely gonna pay another one.
Yeah, man.
Yeah.
Yeah.
Agreement because this payment was about I think 2 point something percent based on
Mm.
a $5 share
Mm.
price.
Nice.
So let's look at this
I mean,
now,
based on
right?
the type
So
of business, too, they would generate a lot of cash. I see them as a dividend player, a strong dividend player.
yeah, it's not like
But
they're
even
going to
with
be
the
And you
building
APO,
twin
though,
towers. Mm.
Yeah, but even with the APO, the fact that they're new shares now, the yield will I mean, in the short term, go down. So
Well,
there's also that.
that depends on what that new shareholding, what
The-
that inflow does to the profit line. Say, for instance, they're
True.
paying $50 million in finance costs and it's eliminated. That's 50 million to the
mm,
bottom line. What does that do for the yield?
Oh, that's true.
You know what I'm saying?
yeah.
Yeah, that's
And then the
true.
thing is,
Something,
they they
to think
they
about.
spoke about some of the stuff that they were looking to possibly do. So
Right.
they said some article, I think it was this month. They said that they wanted to maybe go outside of student housing, possibly, or even outside of UE. And then apparently in the past, well, no, what they actually do now, they actually help to take off some of the excess
Right.
students from UTech. So if
Okay.
UTech has students that they can't place, they're saying that they will actually help house them um, at their places. And then something I was wondering is, would they possibly go into maybe some BPO housing or something like that? Or I
Um,
don't know.
I think they said the occupancy is 94%, so I don't know if they're
They're
gonna
pretty
have
high.
that much
Hmm.
Hmm.
latitude. I think they had said short-term rental, which wasn't in their original projections,
Hmm.
contributed. I don't know if it was 30 odd million. So for perspective, I think they rent a room for 50 to 70 grand a month, and in short-term rentals is $100 a night when they do get short-term rentals. Church groups, sports teams, you know, you might say
Wait, how much you
BPO.
said? 50
I think
versus
it's
what? 80?
50 to 70,000. You guys know, you guys are younger than me. You ask the people them what them pay for rent. No.
No, I actually I need to check. But in the most recent report, they gave the
Eh?
revenue breakdown. It's actually in the most recent report. They actually
Okay.
gave the revenue that they made from it. So when I worked it out, it's 11% currently comes from the short term rentals.
Well, there you go. So that tells you, and that wasn't factored into the original forecast at the time
The
of
original model. Mm.
Prospectus,
Mm.
correct. But then again, I think they had a third tower in it as well. I mean, I think what they're gonna do, if I had to guess, I think they're probably gonna, they're gonna try and fortify that balance sheet a bit more. They have, I think, 4 billion of debt. And while the service is comfortable and all that, it probably just makes sense to lower that number. I think that's a low hanging fruit with rates probably being where they are. That's something I would look at. I think as well.
Mhm.
Just letting the business cycle run could be helpful too. Letting the cycle run, collect, pay out, get new people on campus and let that run for a while. And just pay out all the money.
Mhm.
Just pay out all the profits. I think
Mhm.
hold on, I think that's reasonable. What I wanted to say though is let's look at and I understand the history. So let's look at some of the APOs that have happened, right? JMB, they got money to buy surgical. Barita, I don't know what they've done with the money, but I'm sure people who follow the stock can tell me. Derman bought these guys overseas, right? Acquisitions, especially in the case of the
Hmm.
first and the third, to really factor them into your operation and get the kinks out. It's a 2 to 3 year process. Personally, I like JMB as a company, and I know one of the principals. Great people. I think it'll be interesting to see what that looks like. I don't know if 20% of Sagic Core Finance was, I don't know if it's delivered the return they want. Maybe it has. I don't see it in the numbers. In fact, I think even in light
The
of
most
the
recent
APO,
ones.
yeah, number towards down. Barita, but
Yeah.
Yeah,
for,
pretty
yeah, it was down. Barita, but for
pretty
the
heavy.
the gain and investments or the whatever, I don't even know. I think they probably somebody who's a shareholder probably should ask what the hell is going up in this environment that they're reporting this profit on. I know it's a billion or whatever. If that wasn't the case, I mean, you're talking numbers down aggressively. But we already see the cash flow, being relatively weak. And Derriman again, I know, Ian. great guys. I think they'll do well at the business in New York. But again, it's going to take time for all that to settle. That cross jurisdictional thing, which is in the case of those two, is not an easy undertaking. And so, I mean, maybe something more local, not so that won't require as much adventure. Maybe this is going to be the first APO that comes over really well in 3 months or 6 months. Let's see. But what is certain is
Let's see.
they're
I'd
doing
love to see it. Yes.
30% net revenues. I think what's their revenue of for a billion? Was I don't know what the number is. You have it
One
in
through
front of
eight.
you? Yeah.
Let me pull it up. So revenue for the quarter was the December quarter 340 mil.
Okay.
Um,
For the year, it's like what billion
let's see
three or
the. Let me see. Did I not have it? I
P
must
is
have it.
6. Wow.
all right. So they're doing probably
Fun.
25% net profit margin, which is I think industry leading. And it promises a lot. But as I said before, we never put it together thinking it was gonna gain appeal with. I mean, listen, we do retail deals and we love retail guys to participate, but it's really for, as I was thinking about it earlier, it's for the person who says they're going to buy 2 yard in Mona. I was just so listening. So they're going and put your money to buy two house and renovate and try and make a 3% a year. Let's give you 10% a year in dividend yield. And if you want to come out, you
Mm.
can get it sold in 3 days. I mean, I
Mm,
aspire to for that, and I'm very happy with some of my portfolio to have some of that because I don't like hassle. I don't wake up early, so I really don't have time to run down the tenant for the money. So for me, this is the exposure and student housing. It's the demand is inelastic. Blackstone has invested billions, and you'd have read that Blackstone's lead owner took home a $1.2 billion dividend this year. So we can follow those footsteps.
mm,
Nice.
wow.
It's cool.
Nice.
Wow.
Oh, I found the revenue. So for their full year, the audited
Yeah.
ended September. They did 1.1,
Basically
well, just
1.2
under one,
billion.
yeah, just under 1.2
And they did
billion in revenue.
the profit last year was like
And
three
then they
something.
did their profit for the whole year was 318 million. Yeah.
318 over 1.1 billion.
Wait, for
Pull up X.
for
For
the quarter
1.2.
ended September.
No, I'm talking full year. Yeah. Full
Oh,
year.
oh
Full
yeah,
year
yeah.
2022. So their profit was 318 million on 1.2 billion dollars
Yeah,
revenue. But then
27%.
yeah.
Let me see. Some companies not even making 10.
Hmm. But I mean with this is what almost 350 um million revenue. Multiply that by 4, that's about 1.4
Billion
billion.
for
So they're on a good trajectory right now. And UA is servicing their debt. So
yeah, receivables falling. So, and I mean, there's a lot more where 138 is concerned, but that's subject to the future. But for now, we're just talking about this year. But there may
okay.
be some surprises in store in years to come or months to come. Let's see.
Mm, yeah. It'd be interesting if they put up new towers. Maybe not necessarily even at UA. I'm pretty
I
sure
mean,
student living is needed
depends
in
on the kind of
other.
power they're talking about, sir. Yes, sir. Yeah, so
But
it'll be interesting. That's actually not a bad inference to draw, but we'll see. Sometimes a
okay.
name is misleading here. One SL may not stand for student living alone, but we'll get into that another day.
Okay. Okay, I love that. I love that.
That's
Um,
not part of this.
yeah, that's fair. That's fair. I think we'd be asking for a bit too much and things you couldn't,
Yeah,
say.
that would get me in a lot of trouble.
We definitely don't want that. We need you on the show
Oh,
again, So
oh, Exactly. And because like I get the
Oh
information
boy.
first, yeah, there's probably them
Hmm.
owners being called, and I really can't deal with that. So
Yeah.
anyway, not super. You probably know by now. I don't just the transactions that are just the here and now. Chances are there's always a follow up in many cases. So
I ended up pulling up the JMMB report because we were talking about that. So
yeah,
for the 9 months ended December, they did 4.5 billion
yeah.
profit attributable to shareholders. And that sounds really good. But then when you look at it last year, the supplier, the same period last year, they did 8.2 billion. So
Yeah.
that's
Mm.
quite a fall off there.
I
And
mean, I do
I guess
remember
back
the
to your
source
same
of
point
it.
about the so look, the price right now is $31.
What's the multiples like?
So the PE is really low, 7.93, and that's with this report in.
Well, that means it's justified. I mean, let me tell you, that fall is in the context of the expanded capital base. So it is even more pronounced because you would have said, boy, I mean, I don't know what it was before. I can imagine the profit must have been lower before the APO came in because just 20% of Sagicor alone. I guess I'm
Just the
also interested in,
dividends from that is
yeah, what was the dividends
amazing.
like? Must have been pretty good too.
Uh, I need to double check, but it might be at least all like a billion. But let me check.
I mean, let me
Uh,
tell you, JMB, great business, as I said. It's just a matter of, in my view, what there was a time they had, to my understanding, I think short term obligations, long term assets, long term securities. So there was always a mismatch and there would be the occasional cash crunch, and the question was, how do they correct that? And I've always had that in mind. So my excuse at the time for buying NCB and not JMB was because at the time I think NCB owned 30% of JMB. Which, if you ever can get somebody to tell you that story, it is like one of the illest stock brokerage stories in Jamaica Stock Exchange history. I could never tell you on this podcast how that went down, but trust me, it was the most clandestine of operations ever. And I don't think
Wow.
that trade happened in Jamaica. I don't think anybody would ever come out and say it. Of course, I know, but it was. And I don't want to say the word cloak and dagger, but that's the best way to describe. No, it was like a Nicodemus type acquisition. The point though
Wow.
is that is how I would say. Well, I own some JMB because we were big NCB buyers at the time. I
Hmm.
mean, I think when we sold out our position at NCB for the total holdings, we sold 1 million units between 195 and 200. And the joke is, we still like this to buy at 200.
Wow.
mhm.
But we just never saw COVID coming. But for those persons we're selling for, we've been buying at 30. Like, what you going to tell somebody? You have this pot of gold in your
Exactly.
hand. You're going to tell them, hold out for a bigger pot. We're being greedy, like new persons can. And we never sold from one to the other. We sold, we had bought into some other things that fell a bit like Sagicor or whatever, which we still have to this day. But we sold, and then new funds came in and we bought some. And obviously, they're riding out the wave of that disaster. But I'm sure NCB will rebound shortly. The point, though, is that the imbalance with JMB's balance sheet is what always gave me a pause with it. And I'll give you another bit of insight. I am always wary. This is general. This is not specific to any one company. I don't like a lot gains on investments from the standpoint of they're influencing operating income because it's a non-cash item. And just like the upswing can always be captured and put into the profitability bucket, the downswing can unnecessarily work against profits as well, which can be problematic for the person looking on. I try to look at operations as operations in and of themselves,
Wait,
and
what
then
do
I
you
look
mean?
at
Sorry, I don't think I understand that.
which part.
You're basically
Tell
talking
me.
about like wait, let me see if I understand. You're talking about like for example something like MJE, where it's basically a stock portfolio, and then as much
No,
as sometimes, oh,
not MJE, because MJE's nature of its operations would subject it to that. What I mean is, if I am, let's use some examples. If I am running a Panjam, so I think they have been downgraded unfairly in a sense because the investment portfolio fell through COVID, right?
Okay.
But at the same time, they could say, well, we revalued our real estate and
Hmm.
Manapart Plaza, no, Manapart Plaza, which I believe they own, has grown 25% in a year. So they use that to offset the value of the stock portfolio dropping. I don't believe they did that, and I believe that's the right thing because I don't think the non cash fall in the value of their stock portfolio, which they would have to book on their income statement, accurately reflects the strength of the business. By the same token, I don't believe markups in investment valuations accurately reflect the strength of a company either, unless it is an entity like an MJE, which is a fund in the typical
Hmm.
sense. But what we have a lot of is a lot of firms revaluing their assets seemingly and booking the difference in their profit and loss, and thus giving the impression of strength when it may not necessarily be the case. That is where, and investors looking on and not doing a deep dive may say, but this is an excellent performance. So I think if there's any accountants watching, I think it should be considered. I think there should be more disclosure on the nature of the assets being revalued. I don't know
Hmm.
how it could be captured, but I don't know. Suppose it's land. Suppose they bought, I don't know, Michael Schumacher. No, suppose they bought like two Richard Mills or something. I don't know what they bought that they're marking up in value. Suppose it's Warhol paintings. I don't know. And it doesn't give me insight as an investor either.